Harbour Energy CEO warns of decrease UK funding because of Providence tax. London, the North Sea's largest oil and gasoline producer, Harbour Energy, has informed the British authorities that Britain's planned Providence tax at the power region will decrease the organisation's investment in the US of A. With oil and gasoline charges hovering and families feeling the hit from higher expenses throughout the board, Britain remaining month announced plans to introduce a 25% windfall tax on oil and fuel manufacturers' earnings, in an effort to elevating $5 billion. A meeting between representatives of oil and fuel manufacturers in the British North Sea, which includes Harbour, and Treasury officials is scheduled to take place on Thursday in Aberdeen, Scotland, a Harbour spokesperson and two industry resources said. Graphic. Britain's biggest oil and fuel manufacturers, we ought to reconsider our strategy and plans within the UK if you want to, I am afraid, cause lower investment, no longer greater, Chief Executive Linda Cook said in an undated letter seen with the aid of to British Finance Minister Rishi Sunak. Britain is allowing the effect of the levy to be offset towards clean investments in oil and fuel projects. But Cook said the motivation does no longer assist agencies like Harbour, which have invested in new projects together with the Tolmount gas area, which will increase UK gas output by using 5%. Cook said the levy hurt so-called impartial producers including Harbour disproportionately more than oil majors active within the British North Sea, inclusive of BP, NYSE, BP, or Shell, LON, RDSA. A Harbour Energy spokesperson stated, "We do envisage a considerable impact on our business, our approach, and our ability to invest in our cutting-edge and future projects in the UK." Oil and fuel manufacturers together with Harbour normally hedge greater than one-half of the volumes they sell in advance to fasten in a price ground, regularly to fulfill covenants with lenders. This way that they can miss out on price spikes in the open marketplace. Cook asked Sunak to alternate the tax plan to reflect beyond investments, decommissioning spending in addition to scrap the levy by the end of subsequent year and installed a better income threshold for agencies suffering from the tax. Harbour's proportion rate has slumped round 19% since the plan was introduced on May 26. Our existing and potential shareholders are actually actively questioning the destiny of our assets within the UK and conflict to evaluate their closing potential given the uncertain and unpredictable financial surroundings, Cook stated. They also are, rightly, wondering our method to remain a huge UK oil and gasoline manufacturer and persevering with to make investments in the country. Graphic. UK authorities' revenue from oil and fuel region. UK government sales from oil and gas zone. Harbour's largest shareholders encompass private equity corporation EIG, which holds a 36% stake, and Singapore sovereign wealth fund GIC and Fidelity, which keep round 5% every, in line with Refinitiv Icon information. The Treasury had no instantaneous reply to a request for remark.